In today's video, we'll be discussing everything that just happened last week in the markets and what to expect for this week in the markets across the world, including our technical analysis levels for the Nasdaq, SP500, Bitcoin, Tesla, gold, dollar index, and more. We've also got some massive moves in crypto over the weekend, and I can tell you what, it looks like Wyckoff accumulation has certainly been working. Is this the start of a massive rally for quite a few different things in the markets? Stay tuned to find out more. All right, guys, well, here begins our market recap closed the 6th of August, 2021. Of course, our look ahead as well at the upcoming week throughout the stock markets, crypto markets, etc. And straight away, when we look at this, guys, we'll notice that it's all about the banks. Now, why is it all about the banks, you might ask? If you're not aware, non-farm jobs was the number, and this is what changed the game in terms of the stock market on the Friday session. We saw a pretty strong number come out, but it was led by two sectors. In June, we had government and leisure and hospitality leading the race. Again, July, leisure and hospitality in the Americas summer, and of course, government jobs were on the rise. Now, is this something that's good or healthy for the economy? I tend to look at it as it depends whether it continues like this. Government hiring is normal. However, government hiring is very large at the moment, and it doesn't really show us a true reflection of the economy. Leisure and hospitality sounds good on the surface, but the problem is there's many lower paid jobs in here as well. So really where I guess the market will be looking for a lot more jobs growth is different sectors. You've got health, you've got financial activities, those types of areas they want to see an improvement in, of course, the jobs. We want skilled jobs as much as possible when you're talking about a financial kind of improvement in the economy. So this led to, of course, the US 10-year going bonkers. The US 10-year certainly broke out and it got to a key critical level that's really going to be something you're wanting to watch this week. So we'll check that out in a few moments. The other thing I want to remind everybody is we're in August. Now, we're still in early August, and we know that August is not necessarily the worst month of the year, but obviously September is a little bit worse. And we've also been very, very aware that when we do our 20-year studies on the Nasdaq, that August and September tend to be weaker months for the Nasdaq in comparison to something like the SP500 or Dow. So just keep that in the back of your mind. These are weaker months. And remember, on the Friday session, we did see weakness in the Nasdaq in comparison. There are many, many reasons behind that. So let's have a quick look at the different markets here. And straight away, as I said, the weakness was in the Nasdaq. The strength was in the IWM. This is because it's got over 22, I think, % of the entire market in IWM is financials, small financials. So that did well. We had the Dow Jones with the big financials in it. And of course, the S&P 500 out slightly green here. All very important areas. When we have a look at the sectors, financials, materials, energy, all of these recovery kind of sectors were in play, and everything else was up to flat to slightly down. So not too much in the sectors. It was really just finances. Let's move over now to what to expect this week. And straight away, of course, we're still in earnings season. That's right. We haven't just ended it yet, guys. Although it seems like we have, because we got Apple and Amazon and Microsoft and the big ones out of the way, we still have some fairly large companies coming out. Notably for many of you, AMC, the trade desk will be interesting before the open. We've got Palantir, another very popular kind of retail stock. We've got Walt Disney coming out Thursday after the close, and there's plenty of others for you to see here. Remember, Earnings Whispers has a cool calendar like this. If you don't get it, you can get it off their Twitter or get it off their email list. I'm not sponsored by them. I just think it's a cool thing. And if you ever have anything else that you want to share with the community, jump in our Discord. Links in the links down in the description below, and make sure to share it with me, and I'll share it with the rest of the community, because we're all here to help each other. I mean, ultimately, it's all about getting as many people informed as possible to improve their knowledge of the market so that they can compete with nasty Wall Street. I mean, that's who you're competing with after all. You're really trying to know what they're doing, following them, and not be like the retail herd that Wall Street really does prey on. So let's start into our technical analysis here, and straight away you will notice that the dollar index had already broken out. It had then found its 20 moving average, and then after the jobs numbers, it went berserk. So is this a strong kind of movement here from the dollar index? Absolutely it is. Does it really give us much knowledge about what to expect? I mean, you would think on the surface it's bullish, but we still haven't closed above that 93. So this is going to be the key zone that we'll have to watch now to really instigate this full double bottom. So we've got the lows in here on the weekly. We've got the intervening kind of peak. We've got the consolidation now that's appearing on the right-hand side. And if we do close above this, I expect US dollar to really start strengthening very heavily, at least into something like the 95 would be actually my expectation, 94.80, 95. So there's a big move here in a couple of weeks for the dollar index if it can get through this 93.20 to start with. Let's move over to the US 10-year. So we mentioned that we had a very nice move on the 10-year, and it's at the critical point coming into Monday. So a couple of things that I think, we do here on the channel, we talk about it all the time. We have a little doji, then we have a long leg doji. We had a decision made before the non-farm payrolls event, and anyone that was prepared to take that got paid off. Sometimes, I'm big on not trading non-farms, but if you have the right risk management and you're prepared to do it, this is a long leg doji decision made candle. You guys know I love that type of trade off the support. And then we get straight into the resistance over here. So what a beautiful little kind of early exit on the Friday close. Now we wait to see what happens here. Will it reject off the 200, the green line, or will it move through and then go this distance? Go, of course, the double bottom up. That basically pushes it straight into our downward trend line, and it's amazing when things proof off. So remember, if it does close above 1.3, we'll call it 1.31, then we expect this US 10-year to actually rise over the week. And that will, of course, put even further pressure on certain things, such as the Nasdaq, and put a lot of strength into things like the banks. So, yeah, interesting point. Very critical here on the US 10-year. Of course, conversely to that, if the 10-year is going up, generally we'll see a pressure on bonds. Bonds, for the first time since this rally started over here, moved underneath the 20 moving average. And I can't say I like it because we have a peak, we have, of course, a trough, we have a lower peak, and then we don't have a lower trough yet, but we do have a break through the 20. I think this becomes very muddled here, what's going on in TLT. This is the 20-year bonds. Is there a lot of support behind? Absolutely. You've got the 200 daily here. You've got the 50 coming up to meet with it. I do expect there to be some form of buying support for the 20-year bonds. But yeah, it's muddled. Therefore, you just look at it over the next couple of days. You don't look at it straight away. So what other things did the jobs numbers do? Well, they caused a massive sell-off in gold and, of course, silver. Now, for many of you, if you weren't trading this with correct stop losses, it could have been pretty brutal. We saw gold and silver hit first take profits. 1830 was our first take profit in, of course, gold, and silver was right up there, I think around that 26-ish, just underneath. So both hit the first take profits. Silver, we had, of course, another bigger plan on it. So it's where you practice scaling, and I talk about this a lot. Scaling, scaling, scaling. You never really get disappointed, because even if you took a little bit of a stop hit, you would have also had a bit of a gain. So you would have found that it would have equaled out either to a break even or a slightly in profit or even really in profit kind of trade. Now, once it closed underneath 1790, it was short, sharp, and very, very quick. You can see how fast it moved to the next range. And unfortunately, algorithms sometimes do this. So the jobs number came out, it went underneath 1790, and then within a few hours, or not even, it really moved all the way down to the 1760, which was our expectation for gold to get down to. This means that gold is now very, very tough to trade again. We've already hit the next take profit level on the short side, so we have to wait for it to either accumulate up or accumulate and break down. If it breaks down again, then we know that it's going to go even further. Where is the next expectation for it? Oh, it's really low. Could be like a 1680. So, of course, if the dollar index makes a double bottom on that weekly, it starts to put pressure on the top. That is going to smash gold down as well. So be careful here in gold. We're now having to wait for structural formation. Anyone that got the short down to this level, congratulations. Now it's more wait and see. Let's see what happens on the next side. Of course, silver also getting hit through. It's very tough to look at this one. This is even lower. It even went lower than the gold. Gold usually is the more kind of technical stabilizing force, and silver's more the crazy cousin that you trade. but you traded off the gold technicals. And in this case, of course, we did hit that 26, as you'll see here. The bottom of the trend line acted as too much resistance. It sold off before the news event and then got flogged during the non-farm payrolls. Now we're all the way back down here at 24.30 in the middle of nowhere land. A little bit too early to tell on that one. We'll move over now to the stock markets, and we'll move over to Tesla before covering the crypto markets. And when I see this Tesla chart, do I like it? Well, we're still above the 700. Oh, I mean, 698, whatever. It's very close. Do I like it? No, not really. Tesla should have already gone more bullish. Usually Tesla, when it closes out, it does something like it did over here on the left. We get above, we rally incredibly hard, everyone gets hyped, and it does the right thing. Over here, are we scared? Well, it did break through 700. The 690 got closed on the daily. It went up to 727, sold off, barely got up there, didn't even get to the high, sold off. And now we're waiting for it to either close above here and for this rally to actually continue, hopefully to the 1770 area. Or if it does break underneath here, I'm actually pretty worried for Tesla. And I think a lot of people in the comment section, put your comments down below. What do you think is going to happen to Tesla this week, guys? Because if it can't hold here, you can already see the problem. Back to 660 we go if we close under here. And then all of this good work of breakout is done for. I mean, that's taken out, and all of that great daily close and everything is happened. Let's take a look at the weekly here. And you'll notice again, the weekly looks horrible as well. This is why I went over to the weekly. The weekly looks like a full-on rejection. Look at that pin bar rejection candle. That's not the type of thing you want to see if you're a bull in Tesla. So very muddy waters. Of course, we'll talk about the Nasdaq in just a few moments, but this is one of the ones that I think is leading a very negative picture here for the markets. Let's move over here to IWM. This is the Russell 2000. Now, because of course the banks, the 10-year went up, and there's so many banks in the Russell, this was one of the better performing indices of the day. In fact, I think it was the best of the big ones. It went up, it put pressure on the stop losses here, it then rejected that level and ended in a smaller long leg doji. So we've got a doji here. We have indecision at this kind of peak level. We get a closure underneath here. I would expect that to mean the 10-year is also coming down and will continue to sell off. If we get a closure above, well, guess what? All the banks are going long at that point. You would expect the 10-year to be breaking through that double bottom pattern and to have some strength in it. And the IWM moves to the 232. So this one could be one to watch this week for traders and investors, because we've got indecision here. We have a 10-year at a critical point, and we know that it heavily affects the IWM. We'll move over to the QQQ. Speaking of long leg dojis, look at this, guys. The Nasdaq has the long leg doji on it. Weaker in the trading session than the other markets because the 10-year again was up. That puts a pressure on debt-laden companies. Often growth companies are like that, which of course is everything in the Nasdaq. And yeah, it's indecision at the peak. What do? We get a closure above this week on the daily. Boom, we go long. We get a closure below. Oh, the nasty Nasdaq bears could be out. And I'm sure many bears are licking their chops if we do get a closure underneath this level, because then we start to put downward pressure here on the Nasdaq. That will put downward pressure, you would think, on the rest of the market. And that will be the one I'm watching. I'm very interested to see what happens through the Monday session on this, because wowzers, that is a very good candle right around the area that we look for it. On the weekly, no bearish signs still, other than every single indicator saying it's overbought, but that's not unusual. Remember, technical analysis is about understanding is something unusual or is something just normal. Indicators, we don't use them too much on this channel because they often give you false signals for a very long period of time. And then when you go back through them in revisionist history, you'll be like, oh, I saw it. I see the overbought. I should just sold there. They forget straight away that it actually showed the overbought signal down here, except it didn't sell till up here or whatever. You know, you can't do it that way. It's just not the right way to do it, guys. We'll move over here to the SP500. This did get a small closure breakout from this little kind of doji level. Do I like it? Oh, it's so slim and marginal. Like, I mean, we did close out. Hey, I said that was going to be bullish, so I guess you've got to go with the S&P 500 slightly out here and above. That is very weak. I would have hoped it would go at least 20 points above. It ended up closing 6 points above our 44.30 area. So this is the distance that we take. We take this distance and extrapolate it out. I would say that I'm optimistic on the S&P 500, but that is one of the worst breakouts you can see. Very small movement, pretty disappointing. We'll move over here to Bitcoin now as well and have a quick look at this. As I said with the markets, it's all about the Nasdaq. I'll be watching that probably the most closely, and also the S&P and how it deals with that 4430 area through the Monday session. But yeah, it's all about Bitcoin this weekend. Look at this, guys, 44,000. Yeah, that's right. It almost hit 45. A big breakout past 42.5. Let's have a look at this on the smaller time frames here. We'll go to the daily. So it's hit the daily 200 or very close, 200 SMA. It's gotten through the 42.5. It's come up, and you would now expect it to come back down, retest from the top down, and then hopefully apply buying pressure. There's not much shorts here in Bitcoin right now. There's really not, I guess you would say, too many things to be concerned about, other than every article saying the SEC is getting involved in it. Other than that, I mean, it's looking really good. Big bullishness pressure here. Ethereum cracked through 3,000 over the weekend. That's pretty damn amazing. Massive moves. Again, for people that are missing out on this kind of rally, I mean, what makes sense on Ethereum now? Imagine if it came back down to 28.52. It's very extended away from the daily 20 at this stage. We do know that it rallies hard and then it often drops pretty quickly. These are previous resistances over here on the left. So what a great point for the market to come back, scare a few people, and then hopefully get little lightning bolt or something off this level. So there's a lot of opportunity in the markets this week. There's, of course, a huge amount of discussion that'll go into sealing this debt, whatever else so that they can kind of come up with excuses. But really, the big thing for this week is going to be the continuation of earnings and what does the US 10-year do, the dollar index do, and more importantly, that Nasdaq do. Watch all of those, guys. We'll be covering them here on the channel. And remember to subscribe and, of course, hit the like button if you do enjoy the channel. It does help us out a lot. You guys are the best. Have a great weekend, everyone. And we'll see you Monday, 1 hour before the New York Open, live streaming here at FX Evolution. Bye for now.